All right, there we go. Everything looking good, and we are live. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8:04 p.m. Eastern Standard Time on October 23rd, 2022. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so let's go ahead and jump right in. Take a look at these charts and have a look at what's happening in these markets here. So starting with TNX 10-year Treasury yields. So we did see essentially new cycle high. We gapped up and then sold back down to close the gap. Closed slightly lower than the previous day's candle, but overall extremely bullish. And as we are getting closer to the end of the month here, we'll look at our longer time frame charts. The weekly, extremely bullish close, new cycle high, and obviously at this point in time, we have taken out this previous cluster of resistance here. We're just kind of tiptoeing through this one right here, and then the next big cluster is our macro target. The next target, the target that's going to get reached at 5.24%. But the truth is, 5% is the target. Nice round number. After that, it just goes straight back down to 0. I'm just kidding. That does not happen. But when we look here at this monthly chart, extremely bullish. All green histograms, blue slope line, bullish control zone. Stochs are still powerfully angled to the upside. We see they are diverging, as in the blue is accelerating away, which means the trend is still very strong. The knife did come up really high, but it cooled back off after that little, temporary rejection back test of the 200s. So again, at this point in time, this little cluster right here, that 5 to 5.2%, that's our next target. And then again, after we get through that, if we continue going to the upside, we have another cluster around like 6.5%, roughly 6.3%. And then again, another one after that at like 7 point something. And let's just hope that we never get up to those levels or above, because something is legitimately, seriously wrong in the world. It is not a good world. That is not the world I want to live in. Does that mean it's not possible? No, it's definitely possible. So, all right. Actually, I'm going to jump around here real quick. So that is the first of two very important charts that we look at literally every single stream. Here's the other one, the other half of the equation, because we know that for the last 6 months to a year in particular, as long as rates and DXY have been rising together, the markets have had the inability to essentially maintain any rally that they got. So if we got a push to the upside, it was followed shortly after by either giving back the entire move or, giving back the entire move and then going to a new low. So now that we're seeing some weakness in the DXY, and by no means does this look like it's topping out to me at all. At all. This does not look like it's topping out at all. It looks like it's consolidating after a very powerful move to the upside before it continues to the upside. So here on the daily, we see the histograms are coming down. We're below the slope line. It's still blue for now. But typically, it's very close to flipping red, which on a daily is essentially saying, hey, this trend's over for now. Now, how long does it last? Well, it depends. Depends on the trend. And then we look here on the stochastics as well. Essentially we top out and then we put in a lower high, and now we're putting in potentially a lower high, getting ready to have a bear cross back down again. But the important thing to pay attention to is that we came from 90 on that peak, we came from 85 on that peak, and then we came from 63 on that peak. And now we're back down at 50. So we're basically neutral. So what has happened? Well, the indicator oscillator has come down from, out of 100, it's come down from 90 to 50. So it's basically cooled way down. And what has price action really done? I mean, it's basically just gone sideways. So we're still at the same price we were at when we were at like some of these peaks. We're actually higher than this peak substantially. This was the peak in the stochastics back here, the big one. We're way up here now. And now the stochastics all the way down from that, 90 level down here into the 50s. So we have all our energy back. Well, not all of it, but we have a lot of energy back in a powerful bull trend. And we've given back almost no actual price on the chart. So that, to me, that's a bullish reset. That's what that looks like to me. So now we'll look at the longer time frames. Still well above the 200 exponential and simple. If and when the 821 gets a bear cross right here, then we can start respecting this as like the first couple signs of, bearishness have shown up. Obviously, leaving the bullish control zone and the hard sell is our first sign here. So that's when we got, bearish consolidation, etc. Started talking about the potential for a pop in the markets, but it was likely not going to be sticky. Again, here we saw multiple red histograms. Once we get 2 or 3 in a row, typically starts, saying, hey, it might be getting close to the top. Then the moving average confirmation, 821 bear cross, will definitely give us signs that there's much more potential for at least these equity market rallies to be sticky. Now, we do have to be careful of scenarios like this. Essentially, what we're looking for, what jumps out on this chart for, hey, we're probably like bottoming and this is going to start moving back to the upside. It was just a cool down. Well, again, here we leave the bullish control zone. We come down, we enter the bearish control zone. Price action does not go much lower. And then eventually when we come back out of the bearish control zone, and the 821 cross back to the upside, we go another powerful rally. Exact same thing happens again. Leave the bullish control zone, hard sell signal, enter the bearish control zone, leave the bearish control zone, hard buy signal, 821 cross back to the upside. And again, we see a nice sustainable rally right here. So that's what I'm looking for. Now, do we have to get all the way down to the bearish control zone? Does the stochastic have to drop below 20? No, it does not have to. Do we have to get a bear cross on the 821 daily? No, it doesn't have to. But we're looking for those signs. They happened the last 2 times in a row during this bull market rally that we've been going on, or bull trend, whatever. So we'll keep an eye out for a similar thing to happen once again. People are often conditioned by the markets. And that's likely what's happening right now. Excuse me. So DXY is next. Or I'm sorry, weekly rather, on the DXY is next. So right now we came down to the first moving average. We've been talking about this. We said we don't need to necessarily go down as much as we just have to go sideways long enough that we eventually bump up against the 8. And we know here, now there's obviously some moving averages we could use in the middle. We could do like the 13 or the 21 or, one of the other key Fibonacci numbers. Obviously, or we have the 21. So the 13 would be the one in between the 8 and the 21. So we could have like the 13. It would probably be what we're kind of finding support right here. But the truth is, if we pay attention to this, when the bull cross happened on the weekly, we basically came down a couple times at first and retested the 21. And then we didn't retest the 21. We haven't touched it since February. The 7th of February, we haven't touched the 21. So that's what I'll be looking for. If we lose the 8 right here, you could look at the 13 or something in the middle or whatever made up number somebody else is using for no particular reason. That's completely fine. There's definitely some moving averages in between here. A good one is like the Guppy. It has like a ton of moving averages if you're just all about a ton of million lines on the chart. For me, I've experimented all the different things over the years as far as technical analysis and stuff. And in my opinion, when it's all said and done, I guess I'm like a minimalist because I just prefer less but consistent. And that's, what this strategy is all about right here. So very, very little to see here on the actual chart. Very, very consistent. So we know if we break down through this 8, likely what's going to end up happening is we retest the 21. So I'm looking about like, depending on when it happens, if it happens, I'm looking at somewhere around like 108 to 110 as some support. Now we also have this 3 clusters of resistance right here, and then obviously an open right here as well. So that's right at 109.58. So that seems like a common area we might come back to. And then obviously we have key resistance as far as our descending channel, as far as our Fibonacci's, all that different stuff. Not crazy to me to think that this breaks down here, hits the 21, backtests the key Fibonacci level right here, backtests our, ascending line right here. So essentially we end up at like that 108 level, tag all of our support at the same time, break down from the ascending line right here, consolidate a little bit, and then we can potentially have another move to the upside. Now, when we look at this weekly down here, we have multiple red histograms. We're still well above the blue slope line. Nothing scary yet. We are, however, in the bullish control zone exiting as we speak. So we will get a hard sell signal very soon on the weekly if we don't bounce this level. Now, I don't know what's going to happen, obviously. I think there's a very big possibility that we bounce like this 80 level or bounce off of the pink stochastic and then come up, put another push up to the upside. We do have a high here and a lower high right here. Worth paying attention to. That bearish divergence has been developing for some time. So not crazy to think we're going to have a deep or violent pullback at some point in time. Now, what is it going to be? Is it going to be the Fed pivot? Is it going to be everybody else, all the other countries in the DXY or currencies in the DXY, central banks are going to, go nuts and super hike rates. I don't know. I honestly don't know. Is it going to be some other crazy event? Biden buys up all the ice cream and there's no ice cream for anybody else. I really don't know what's going to trigger the move or what the news is going to say happen afterwards. But to me, we broke through a key resistance level. We shot straight up to the next resistance. And now it's likely we come back down and retest it. And then the strength of the trend will tell us how deep this retracement will be. If the trend is still really strong, this will get bought up more quickly. If the trend is starting to weaken and people are starting to think, hey, this might be it for the dollar, maybe it is topping out right here, we might get a little buying action, but put in a lower high and then roll over. So that's what we're looking for. We're looking for the behavior of the market. Now, when we look back here and we see this fib line right here, this ascending fib, we see how much resistance it was. This whole way up, it was acting as resistance. We burst through it, we get rejected, and then we sell down much lower. And when we sell down lower, you see we hit, this was a 382, this line right here. This is the 0.5 right here. I don't know how good you guys can see this chart, so sorry if not well. But very important levels, obviously, through here. And then again, here, if we go down to 618, that's where we put in this head and shoulders. Double bottom right here, whatever you want to call it. It doesn't really matter. The fact of the matter is, though, is if we just look at it and we say, okay, hang on a second. So we were having resistance at the 382, but we were slowly creeping up. And then we drop to the 0.5, and then we drop to the 618. So it's a 2 fib level bounce. And then what do? We go down 2 fibs, and then we go up 1, 2, and then, the third one is still slightly up here higher. But as we're just trailing these fibs, we're not going necessarily to higher levels on the actual fib because it's an ascending resistance or support line, but price action is going higher. And that's the beauty of a bull trend is, if you do nothing, you end up typically at higher prices over time. So when it's all said and done, obviously very, very important levels. So the next key level will be a touch of the 236 if we can get up there. And depending on when that happens, it could be much higher. It might be just slightly higher. Probably is going to line up some similar or close to around that 120 level. So we're at like 111 right now. We touched about 115 right here. So let's say we do cool off right here. Let's just say exactly what I say happens, okay? And I just happen to be like right, again. Let's just assume that I'm right. So what we would do is theoretically come down here, test around this level, maybe even see some resistance right here, bounce around, kind of chop through, and then eventually maybe get that push up here, and we come up and we tag that next level, we tag that fib, etc. That's what it looks like the market wants to do right now. Now, does it have to happen? No, it could be something completely different. We'll see in time, obviously. But something along those lines. It looks like it's going to come back down here. Maybe it doesn't even break through this support line right here and then just shoot straight up. But very high likelihood, in my opinion, that the 120 level gets reached. We had a chance to essentially triple top right here and fail at about 103. There's not much resistance in between that 103 level we broke through and the 120 level. I mean, there's a little bit on the way up here, a little bit on the way down right there. And then again, same type of thing right here. There's a little chop back here, from the 1970s. And then obviously we have, this little peak from 69. This is before that. So obviously much more important. So what do I think is going to happen? I think the dollar is going to continue to strengthen over time. But short term, it does look like it's getting ready for a little more of a consolidation potential pullback. Now we'll see though, because if we broke up through this level and then it starts acting as support, it's likely we back test up here without breaking back down. So there's definitely a world where we go up to 120 before we go down below, 110, like sustainably closing. And then we look at this monthly chart right here, super clear. I mean, 8 and 21 bull cross goes parabolic above the 200 exponential, which just crossed over the 200 simple. Both have a bull slope on them. So beginning of a long-term bull trend on a monthly time frame, one that we have not seen since, the 1980s. The last time it ended, basically. We have all green histograms. We're above the zero line. We're above the slope line. Everything bullish on the TDMACD. And then, of course, on the Jewel Thief, stochastics are inside the bullish control zone. The pink stochastic is about to enter into the bullish control zone. And, both of them still have positive slope. Now, the blue one is kind of just hanging out at this level. Knife is coming down a bit. Still looks very, very bullish to me. Still looks very, very bullish. So we'll see what happens. Now, the truth is, though, if this does break down, if we do get the 821 cross to the downside, if we do start seeing some weakness and the bearish, divergence playing out on like the weekly or, some of the stuff we talked about here on the daily, that and the 10-year treasury or just treasury yields in general, or, whatever you're using as your proxy, it could be a 3-month, a 2-year, a 10-year, none of that matters. It could be the Fed funds rate, whatever you're using as your proxy for interest rates. If they start to come down as well as the dollar coming down, that could be, essentially the tag team backing off, and that could really be a catalyst for a powerful rally. Now, what would that be? It would be a bear market rally and likely lead to lower highs and continue to the downside. But, there's a definite potential scenario. We've been talking about how the markets are at key support levels, et cetera, all that good stuff. So, it looks like the timing is kind of setting up for it. Now, the real question is, though, and, it doesn't matter what I think or what I want to happen, but, from a market perspective or market participant perspective, typically what happens with the Santa Claus rally is it starts after Halloween and then it runs up until literally a couple days, New Year's essentially, a couple days before the end of the year. Now, it makes sense that things like this happen because what I'm expecting to take place, if and when we do get this Santa Claus rally, is basically a lot of selling in weak stocks to take place and a lot of buying in stronger stocks to take place. But we're going to see some buying in weak stocks as well and some selling in strong stocks. And the mentality behind that, the thought process, has a lot to do with capital gain stacks. If you hold an asset for a year or longer, there's lower capital gain stacks, obviously, in the United States. Now, it's different for everybody, different for every country. I'm not a tax expert. I'm not your accountant, blah, blah, blah. So, figure it out for yourself. But a lot of people will be selling positions that are a year plus old to capitalize on that capital gains, with the year long-term capital gains tax. People will also be, because it's the end of the year, they'll be tax loss harvesting. So if you have a position in crypto or a position in stock market or something that is down, especially substantially, oftentimes what you'll see is people will dump the losers and then they will put more money into the winners. Or maybe they'll keep dry powder on the sidelines, or maybe they'll buy some other loser stock. It doesn't matter where the money goes. What matters is people sell their losers, even if they still like that. With crypto, you can buy it back right afterwards. You lock in the loss and then you buy it back immediately and it's whatever. That's still a loophole for now. That's not the case with equities. If you sell pot stocks or an index or something like that at a massive loss, log in those gains, you can't rebuy that again in your portfolio until 30 days plus has passed by. So they basically don't want you doing what you can do in crypto, which is basically like, oh, I'm going to lock in that loss and then immediately rebuy at the same price. Because, you're not, it's basically the tax system saying, hey, don't try to use our own system against us. So when it's all said and done, there's going to be a lot of people selling their losers. There's going to be a lot of people buying big losers, thinking, hey, the bottom might be in. And there's also going to be a lot of people, consolidating into their winners. So if you sell your losers, tax loss harvest, we might see a bunch of strength in like Apple or, some of the other key leaders in the markets. We may see more money piling into energy. But same thing, it's not necessarily about are people buying or are people selling. It's about how much people are buying, how much people are selling. So we don't know exactly what the trend is going to be. Right now, it still looks like energy is trying to stay in charge, but we'll see in time. Obviously, if the DXY and TNX weaken, it's going to be a risk on environment. May have some kind of fundamental catalyst as well. But that's what I'm looking out for. That's the biggest catalyst I see in these markets. That's the way I see the next couple months playing out. Now, is it possible that we rally 2 months into the end of the year? It is, but the truth is, when I look at the major indices, it just seems like too much time. And I know that sounds crazy. You're like, how could it be too much time? We'll just look at this and we'll jump back around and go back to our normal stuff. The reason I say it's too much time is in just a couple of days, we already rallied back up to here. Now, I mean, we're off the highs a lot, but we're not that high off, not that far off the highs. Now, this rally right here from the literal bottom was the 17th of June, and then to the literal top was the 16th of August. So that was a 1 month rally right there. And a pretty steep one, obviously, as well. So if we get a 1 month rally from where we're at right now and it's anywhere similar to this, that basically puts us back up around those highs again, which is viable. But, we have 2 months. So is it going to be a 1 month rally that's already started and then it's just going to end? Is it going to be 2 months, but just a slow grind up? I don't know. I think the next key resistance we're looking at is basically a back test around, potentially that 33.5 level. Somewhere maybe 33.2 to 33.5, something like that. We have obviously our pink resistance, or purple, whatever color that is. Here we have this key red resistance right here from that. Now it's not like a super strong one, but if we kind of drag out and look at some of these levels where we had support previously, we could look for something like that. Now we don't have a fib that really lines up. Obviously the 236 is right here, but there's nothing in between the 236 and the previous all-time high. So we'll see. Maybe the rally's over right now. We come back down. We tag the 382 perfectly over the next couple weeks, and then we can go on that face ripper rally and push all the way up here, and the timing works out a little bit better. I don't know what's going to happen. We'll have to keep an eye on it, obviously. This was a nice little rally, a quick little rally. Based on weakness in the dollar, Treasury is still pretty freaking strong right now. So we'll see. I'm going to be watching gold to see what gold is telling me, because if gold really starts moving, I think there's a lot better chance of this being a sticky or sustainable rally. So looking at oil, so we closed that daily again below here and crossed 821 bearish. So we're basically just right below resistance, trying to, reclaim it. So if we reclaim it, obviously we come back up here, probably going to test the 200 simple. If we don't, we're going to test the lows. So I'm looking at either 76 or 98 right now, and we're at 85. So it's $9 pretty much, either way, 9 or 13, I guess. So there's probably a little more alpha to the upside for now. But the truth is we broke down below the 200 exponential and simple, and typically I'll play the back test or the version to the mean, but I won't get greedy with it. I'm not assuming we're going to get another better back test. We'll have to see. We're still putting in consistently lower highs and lower lows. We have overall mild winter so far in Europe, in the United States, in general. So, and everything going into like recession potentially, slowing down. I'm not sure the oil demand is going to be there. Obviously there's supply and there's demand. So if we see big supply cuts, like we're hearing, the real question is how much of it's an actual cut in supply and how much of it is a cut in, like the potential. If you're allowed to, based on like OPEC kind of works out their little deals or whatever, and let's say I'm allowed to do, 1 million barrels a day or whatever, but I'm only able to output 800,000, because I have staffing issues, or, there's stuff backlogs, or I'm waiting on something, or I've got machines down because I need the parts to fix them, or, whatever the situation is. A lot of these oil countries are not putting out their allowed maximum output. So if I tell you that, I can score 100 points on this test, and then you look at my test results for my whole life and you say, wow, this guy's like a C student. He gets like 75 on every test. You're like, great. And then you look at all my tests ever and you say, well, what are the outliers? What's the highest you ever scored on a test? And it's like, oh, 85. Great. Average Joe. What's the worst you ever scored on a test? Oh, 65. But your average is 75. Well, if you tell me like, hey, from now on, like, you can't score over an 85, like, does that matter to me? Did I just lose 15 points? No, I never got over an 85 to begin with. So who the fuck cares? As where the kid who's scoring 100 sometimes, you put that curve in there and say everybody gets 15 points added to their, score up to 100. The kid who's getting 85 on every test is now getting 100. That's good for him. But the kid who was already getting 100, well, I mean, you can't get over 100, so you still get 100. So you're kind of like everybody else getting pushed up. But in actuality, that person's kind of getting dragged down. That's sort of what's happening with OPEC right now. They're talking about, oh, we're going to cut supply, but they're already not delivering. So I don't know. It's a tricky situation right now. You don't know exactly what's priced in. You don't know exactly, what's going to end up happening with these actual numbers versus, the threat of cuts. So we'll see. I'm not convinced that there's this like huge demand right now for energy. I think the market still thinks there is, but like in reality, I'm not sure that's the case. And I think it's going to be slowing down real quick. One huge thing that people don't talk about, or people do talk about it, but I don't think they really realize, the U.S. housing market is massive. And, what finances every fucking house purchased? Debt. So if the housing market slows and people aren't buying houses, that's a lot of credit not getting, extended. And then there's a lot of, you got all the things that go into building a house material wise, plus all the labor that goes into it. You know, I mean, there's just so much economic growth generated through a booming housing market. And, you know, a lot of those machines take diesel, you know, to bring the materials out of the ground or to dig up the dirt or, you know, whatever the situation is. And I'm just honestly, I don't think people are adequately pricing in the amount of demand for energy that we may see evaporate in the very near future. So next we have the VIX. Hey, what's going on, Eli? Good to see you, brother. Quick correction. Previous rally, June through August in 2 months. June. Oh, yeah, my bad. Yeah, what did I say? A month? Oh, on the, yeah, okay. So, yeah, maybe it's not that crazy to think we get a 2-month rally and, you know, push up till the end of the year. I mean, it's still a little early. What are we? We're about, I mean, we got November and December and a little left in October here. So, yeah, it's possible. I mean, that would be almost like 2 months, 2.5 months. Trading day wise, it would be about the, you know, just maybe like 5 or 8 extra trading days, something like that. Yeah, that's definitely a possibility. It's definitely a possibility. I honestly would have just preferred to see the rally start into November if it's going to be sticky. But we'll see. Again, you know, might not be far off. So next, let's look at the VIX. Obviously, the VIX is still massively elevated, up here around 30. We know historically speaking, it's somewhere closer to like 19, 20, somewhere around those levels. So very, very high elevated volatility as expected. And it has been through the whole year as predicted, as expected, as discussed, whatever. No surprises here. You know, we burst back inside of this little triangle consolidation. So you say, well, it's not valid anymore. Just redraw it. Well, I mean, it's like the same thing. The only difference would be we basically just have like an ascending support and a descending resistance. So sure, I mean, we could like redraw all this stuff so it's like still inside, but you know what's different? Well, nothing. We still just have a triangle. It's the same thing. It's just slightly, you know, different than how I have it drawn, which is whatever. You know, we can correct it, we can move it, we can do whatever we want, but it doesn't really change anything for me. So I'll just leave it how it is. How about that? So, I mean, realistically, you know, we're looking at the bottom of the triangle around here. We did get a stab out of the triangle right here, reclaimed it. So, a little break to the upside, a little break to the downside. Don't get too crazy right off the bat. You know, a lot of stuff could change. Realistically, I mean, we probably should have moved this to like over there or something along those lines. And then really it already kind of broke down from the triangle. I don't know. There's a lot of ways you could draw this. I mean, honestly, you could, yeah, we could do this all day. The fact of the matter is, you know, VIX is extremely elevated. It's been consolidating in a range for some time. It's near the top of the range right now. So, you know, realistically, the bet is on volatility coming down. We're seeing that happen on the indicator oscillators as we start to roll over a bunch of red histograms below the slope line. Hard sell signal. Stochs are moving to the downside. The problem is we're seeing all the weakness in the indicator oscillators, but we're literally at the top of the range. So either this rolls over quick or it's getting ready for a big breakout. And that's what, you know, if everybody who's calling for the bottom or doom and gloom, you know, if we break out from this range, just kind of going back here to, you know, this is like 2000. Let me go to a longer time frame so we can actually. I don't think people realize just how elevated the VIX like really is. If we go back here, 2000 is right around here, so we didn't see like crazy VIX spike. We see it like in 99 right here. It kind of cools off but stays elevated a little bit. And then we see like sort of a second double top here in 02. And then it melts down all the way into like 2005, 2006. And then goes insane all the way up to 2008. And that's where we get the blow off top and the all-time high. So here we get a massive, massive spike. This was our Rona spike right here as well. Every other time we've come up inside of this range, it's literally just been a wick. So you could say without, you know, with the exception of these 2 times ever in history, that when the VIX is up here in this red zone right here, which I have it just above like 40, about 45, every other time we have just wicked either to that level or slightly into that level and then gotten rejected. So we're literally, you know, when we look at this on the monthly, it really just breaks it down. You know, we're literally just slowly creeping higher, but we typically see a big month of volatility, then a sell-off. Big month of volatility, sell-off. Big month, followed up month, sell-off. Big month, sell-off. You know, every other candle pretty much is green. Every other one's red, however you want to look at it. So, you know, if this month closes red down here, whatever, then probably next month's going to be green. We haven't had 2 red months on the VIX since essentially June of 2021. You know, that's a while ago. That's a pretty elevated VIX. So essentially what it comes down to is, you know, look at the average size on these candles right here. And, you know, let's just say the next one is a decent sized green candle to the upside. That could be our bottom. I mean, there's a possibility we get a big sell-off, crazy volatility, you know, spike in the VIX up to like 45 or something like that, get rejected, and then that's the bottom in the markets, and the Fed pivots because, you know, markets start to capitulate, whatever the situation is. I don't know. You know, land war officially breaks out, like between NATO and Russia. I don't know exactly what it's going to be, but I could see a scenario where we do get one more big spike up here. Now, it doesn't mean we have to come to this level and get rejected. It doesn't mean we can't put in one of these crazy ones where we close, you know, a candle, a monthly candle inside this range. It's definitely a possibility, but it's only happened twice ever, you know, on this chart at least. So it's much less likely that that happens than we just get a spike up here. So we'll see. Momentum still to the upside, still bullish. The green slope line, green histogram has you know, reclaimed the slope line. It's still blue. For right now, I mean, momentum is still to the upside on this. Now, because it's an oscillator, the moving averages are a little less useful, but we are still above the 8 and 21. We're still above the 200s. So everything's still pointing to the upside on the monthly for, you know, the VIX. So what does that say? It just tells us, you know, volatility is going to probably stay elevated and continue trending to the upside for the next few months or so, next year, who knows? But the fact of the matter is, we know as long as volatility is elevated, you know, it's measured essentially, are people buying downside protection? Are they buying just calls or puts or both, you know, etc. So it tells us there's still uncertainty, but we're not at like a crazy capitulation event. A big spike likely is from some kind of event like that. So we talked a little bit about the Dow Jones. Nothing really more to see there. No big surprises on this. It's basically doing what we've been discussing. We came down here. We hit the 200 exponential and simple. We bounced it. That was our goal. We bounced the 382 almost perfectly and backtesting the 236. So what happens very, very soon is going to be important. You know, do we break above the weekly 21? Do we break above the 236? Do we potentially come up here and put in a new, you know, higher than this previous high at like 33,750? You know, I have to stay tuned to find out. Obviously, we had some bullish divergence playing out right here. We saw bearish divergence playing out on the dollar. We talked about key levels and how a lot of our key assets risk on environment was like starting to show as we were hitting support levels. Not crazy to think, you know, we retested the COVID highs on the Dow. All this lining up basically, you know, pretty rationally, I would say. And the market moves to the downside have been like pretty organized so far. So I think that people don't understand the importance to the Fed and to the central banks is organized decline. They don't want some meltdown market breaking type event. So that's very, very important. And it's great. I mean, the Fed is, you know, I hate the Fed. They're total trash. They're fucking scum. But, you know, I mean, it's controversial, but they're doing a pretty good job. If your goal is to like delete the value of assets or, you know, delete demand for goods and services, I mean, they're doing a great job destroying wealth. So congratulations, keep it up. Now, is that going to stop inflation? I don't know. Like if there's a shortage of something, I mean, ideally you just like make more of that thing, you know, but also just making everybody poor, you know, I mean, I guess kind of that works too. It's just the other side of the equation. You know, it's obviously the more painful side, but obviously governments and, you know, central banks are fucking morons. So Dow Jones on the monthly, very, very powerful knife stab down here. We didn't get down to the bearish control zone yet. Stochastics are still powerfully angled to the downside. All red histograms, red slope line. You know, we just lost the 200 or the 821 bear cross rather. Not good. We're doing exactly what we said though. Last time we broke down, we back tested it and then we got rejected and we went to a lower low. And then of course, after that one closed, we said we're likely going to bounce back up and back test those levels. I thought we would run into a little more resistance around like that 36, 37 range, 30,700. But we shot through that pretty aggressively. We'll see on the other indices how they look in comparison. But, you know, momentum wise right now, the 8 and 21 are still bear cross, you know, still pointing to the downside. Is it possible we come back up, you know, and reclaim those levels? And then what happens then? Or all of a sudden you're going to be like, I can't believe you're a fucking bull now. You son of a bitch. You were a bear the whole time when it was going down. And now that all of a sudden it's going up, you're a bull? What an asshole. I mean, it's just how it works. I mean, I don't really care. I would prefer the markets just go up all the time. Life is so much easier when you're just like, oh, look, I did nothing and made a bunch of money. Congratulations. I wonder if it'll happen again tomorrow. But SPY, I mean, daily, very, very similar. Obviously, pretty powerful rally right here. It looks like we're about to cross over the slope line, bunch of green histograms. If we can do that, we'll be threatening the 0 here. We're back above the 21 on the daily, 821, potential cross, still a few days out or a few powerful candles out. We are back testing this resistance. It'll be a little more clear on the weekly chart, but it does seem possible. Look, this is what happens. We test the 200s, and if they fail, we try to rally back up and save them. We put in a lower high, so we go to a new low. And then what happens after that? The reversion of the mean. We retest the 200s. We come back up. If we fail, we go back down to a new low. So the next rational thing to happen is that, if this is going to in fact be a temporary bottom or permanent bottom, whatever, the next rational thing is that we're going to come back up here and retest the 200 exponential and simple. So probably somewhere around 404 to 412. Now, if it's weak, we only hit the 200 exponential and then it rolls over. If it's stronger, we could shoot above the 200 simple. Not likely we're going to put in a new high right here. If we do, though, at that point in time, the 200s will have leveled out. The 821 will be bull crossed. All the indicator oscillators will be bullish. We'll have taken out the previous swing high right here. If we get above 430, a lot of people are going to be mad at me because they're going to be like, oh, I can't believe you're bullish now. But look, I mean, I stick to the system. It works. That was the whole point of putting a shitload of time and effort into building a system, is so I don't have to use my brain. I mean, obviously I still do sometimes, but I get to be extra sarcastic because I don't have to think about what to do with trading because, the system just tells me what to do. So looking pretty good here on the daily for a potential setup. Now, could it just literally fail tomorrow? Sure. And that's why we'll be watching the three main things that we need to see. We need to see rates come down some, which doesn't seem likely to me. Not on a sustainable basis. We need to see the DXY weaken. We need to. I mean, it's overdue. It's putting a lot of stress on a lot of countries. If it keeps going just parabolic, it's going to break something, and that's not good for sustainability of, markets, potential, etc. So hopefully we see some weakness in the dollar, and then it can allow this rally to be a little more sticky. And then the next one I really need to see is gold moving. I mean, I don't care about silver. I don't care about copper. I don't care about aluminum. I don't care about any of those when it comes to what I'm looking for. I'm looking for gold. Gold is a big market, and it's a basically risk on, risk off play. So if we don't see gold start moving to the upside as the dollar potentially weakens, as equity markets potentially strengthen, as crypto strengthens, etc., if we don't see it, I don't believe it. So we'll see. SPY on the weekly, though, doing exactly what we said. Came down here. Here we were saying, well, we could get a rally off the 200 exponential, but I expected it to hit the 200 simple. Instead, we got a big rally, called the top right here, obviously, in the rejection. And then here we are now hitting our target. So I was a little surprised that we didn't touch the 200 simple on the first time. It doesn't matter, though. The timing is the hardest part about it. But eventually, it does what we said. The problem is if you do the timing wrong and you're expecting us to go down here and hit the 200 simple and then it rallies and, rips your face off, you might not get to play the game anymore when it does hit your target. So you have to be measured in these things, obviously. And that's where, risk reward and position sizing are super, super important. So back testing the 8 right now. If we can get up here and test the weekly next, that would be like 389. Seems likely. I mean, it makes sense that we would have at least a dead cat bounce off the 200 simple the first time we touch it. Again, we see bullish divergence taking place. We only have one green histogram. So people are like, oh, I already missed it. Damn it. Why didn't you tell me sooner? Well, I mean, we have one green histogram. Typically, I look for two. But, obviously, bullish divergence definitely developing. If we roll back over right here, can it invalidate it? In a heartbeat. In a heartbeat. And same with stochastics. It could easily invalidate this bullish divergence. And that's why we look for two green histograms. And on the monthly, I mean, just looks atrocious. This is more what I would expect to happen than what we're seeing on the Dow. Dow's actually a little bit stronger than what I would expect to see. S&P is basically like textbook. Again, we break down to a new low, we back test it, get a clear rejection, 821 bear cross happens, break down to a new low, back test it, and now here we are at the previous low right here, trying to push back up above it. Is it possible we get all the way back up here and get rejected again around 400? 100%. It's definitely possible. All red histograms, red slope line, stochastics power the angled powerfully angled to the downside. Obviously 821 bear cross. You know, seems like probably the real target on the S&P, because it's still staying a lot stronger than most of the other indexes and definitely most of the other individual stocks. The real target's probably 323, the pre-Rona high. And then we'll see what happens when we get down there. We're just bouncing the 382. So tons and tons of confidence right here, as expected. Back test, and then again, we would expect a rejection around the 236, around the 200 exponential, the 8 and 21 moving average on the monthly. And then, you know, likely just rolls back over. And again, we have the superimposed price action here from the 2008 crash. And, you know, we're basically, now it's not perfect, but, you know, pretty much doing the exact same thing, rolling over here, following the roadmap perfectly. I mean, who needs TA when you can just fucking do that? Shit. I'm about to quit. I'm not even going to do TA anymore. I'm just going to superimpose shit, man. So seems likely, obviously, once we get off the 382, we backtest the 236, we get rejected, we come down to the 0.5, we come down to the pre-Rona highs right here. You know, the 0.5 lines up with the monthly close. The yellow line right here lines up with the little wick. Okay, so maybe we touch tips and we get a bounce from like 338. More likely, though, I think we find support around this 323 level. That's where we start looking for a macro bottom, in my opinion. Okay, we hit the 0.5, the 50% retracement, then we can start talking about a macro bottom. Now, is it possible we bottom on a 382? It is. It is. I mean, what, off this? This is our support right here, and the 382, that's what we're bottoming off of? I don't know. I think this is a lot stronger of a support. You know, the pre-Rona highs, we also have the 0.5 at that level. We could blow through it and go much deeper. I'd be looking for the 618 if we violate the 0.5. But right now, I got my eyes on this. Now, before that happens, though, I think we have further upside. Now, again, is this going to take 2 months to do? Probably not. I mean, most of these candles are pretty violent one way or the other. So, you know, let's say we just closed right now where we're at. It's very likely in 1 month we could be up here at the 236 testing it. And you know what? If we start closing above that, we start crossing these moving averages back to the upside, there's still potential for a lower high. But I'm going to tell you what, man. People are going to be mad at me. They're going to be like, well, you were a bear the whole bear market, and now you're bullish. Now that we're in a bull market, you're a flipper, dickhead. I heard you bought XRP. Oh, God, it's true. I did buy the XRP. Oh, what is wrong with me? All right, so QQQ. Let's keep this thing moving. Triple Q's, little NASDAQ attack. So we got the new lows down here. We hit the 0.5. We hit our target perfectly. We're back testing the 21 on the daily. Left the bullish control zone. Hard buy signal. Stokes powerfully angled to the upside. Bunch of green histograms back testing the slope line here. We'd expect it to act as resistance. If we can burst through it, we'll be retesting the 0. And then potentially flipping this blue. So again, not crazy to think that we're getting ready for, you know, what do? We know what we do. We put in a lower high, we put in a lower low. We put in a lower high, we put in a lower low. So likely we come up here, we put in another lower high. So since we already hit the 0.5 here, if we're going to retest the fib level, it's likely going to be the 382, which also lines up with our multiple resistance levels here. Now keep in mind, we did poke through that in order to get after those moving averages. So it's not crazy to think we come up here to the 382, we find some temporary resistance, and then we burst up here so we can get our nut on those moving averages. Because you don't want to get that close and then just be like, nah, I'm done. I don't want to finish. And it's like, really? You're so close? And it's like, nah, I don't think so. I'm good. I'm just going to go to sleep. I got a headache. So, I mean, and that's what the 200 moving average is. You know, it's getting your nut. The market wants to hit the 200 moving average, and then it either wants to get rejected or reclaim it. It's like a magnet, and it attracts price action to it. And the closer it gets, the more likely it is to just go that extra little distance. So that's what I think is likely to happen. You know, now could we overshoot it and hit the 236? It's possible, but we already kind of got rejected at the 236. So, you know, we find support, lower high, we break down, we backtest what was support as resistance. We get rejected. That's called the SR flip. Support becomes resistance. You could call it a SR flip, even if it's resistance becomes support. Same fucking thing, just the other way around. If you call it an RS flip, though, like people are going to think it's like some kind of skateboard move or something, and they're just not going to follow you. So don't try to get tricky with it. All right, just stick to what you know. So anyway, little back test right here. Could we come all the way up to 236, double top it, roll over, reclaim it, continue the upside? Sure. I mean, if we start getting back on top of the 200 exponential and simple, I mean, look, people are going to be mad, but it is what it is. People think like, oh, you hate markets, and then it's like all of a sudden they're good and I'm bullish, and they're like, oh, you dickhead, you're flipping. Oh, you don't have any conviction. Weekly chart, you know, same thing, hit the 0.5, back testing the moving averages, slightly weaker on the NASDAQ because we are still below the 200 exponential and simple. Not surprising, just because it's been, you know, it was parabolic move up and then it was a violent move down. Back test, I mean, look at this, is like picture perfect. Support at the 236, lower high, support at the 200s, back test at 236, resistance, new lows, hit the 0.5 perfectly, broke down below the 200 exponential and simple. So again, what's the next move? Likely at least a retest of the 382. So should this box maybe just be like down here, you know, and that's also the 21? Yeah, maybe. I like it where I had it though, so I'm gonna leave it there. But I wouldn't be surprised, depending on how strong or weak the markets are, between what the dollar and you know, DXY and TNX are doing, etc. I wouldn't be surprised that this just is weak and rolls right over. I don't want to sound overly bullish, and I know, because I'm always bearish, you know, in a bear market, obviously, but I'm always bearish. So like, I can say literally anything slightly bullish, and people are like going nuts. They're like, "Oh my God, you're bullish now? It's crazy." Like, it's not that crazy, guys. I mean, all right, maybe it is. So we'll see. It's one green histogram. We got some bullish divergence potential. We could easily invalidate it. We're below the moving averages, all four of them. We're kind of at the 200 simple. And it's literally the only thing that's keeping us alive right now. So if we lose the 200 simple right here, if it flips red, you know, it's going to get violent pretty quick. Nothing crazy on volume or anything like that. We do have slightly lower here, the pre-Rona highs right there. It lines up perfectly with 618. I mean, if you were like, hey, pick one spot, you have to pick one spot, and that's the spot that you think there's a highest probability that we put in a macro bottom, that's it for me. It's this right here, the 618. Now, do I think that's going to happen? No, I think everything goes to zero. But, I mean, it could. I mean, probably not go to zero, but, you know, close. Matter of fact, couple requests from some of the members going to zero. So we'll talk about that. So stay tuned if you want to see the worst stocks ever. I'm just kidding though, guys. I love you. Triple Qs on the monthly. Again, just pounce on the 0.5 in the bearish control zone. All red histograms, red slope line below the zero line. I mean, this is pretty disgusting right now. But maybe that's it. Maybe we reached peak bearishness and, you know, now the dollar's going to let up and it's going to be time for some rocket fuel. We're going to the moon, guys. Don't forget to bring a towel. IWM, the old Ruddy, the Russell, you know, basically double bottomed here for now. Actually is stronger because it didn't technically put in like a new low. It basically like double or triple bottom. So that's good. Looks okay on the daily, exactly the same as everything else. Obviously, a back test of the 200s would be about 188. A test of the 236 would be slightly higher at about 195. We're currently at or around the 382 at the moment. This one is more, it can move more than some of the other indices, but in my opinion, this just does whatever everything else is doing. It just does it worse in general. Weekly, we see potential for bullish divergence. Again, could easily be invalidated. The weekly close, again, a double bottom on the daily and weekly right here, potentially. Still below both our 200s. The 200 simple is flat. Very, very close to confirming a weekly bear market. And the last time we confirmed the weekly bear market was literally like the meltdown. So we don't want to see that happen. We want to see something like this happen where we hit the moving averages and then get picked back up and then don't put in a new high for 3 years. Wait, no, that's not what we want. What the fuck? What a trash index. The trash Russell on the monthly. Not much different here. Again, we would expect this to act as support. It did initially. We got a bounce. We got a clear rejection. And now it's sort of acting as resistance. So, Ruddy, you better pick yourself up. Dust yourself off, okay? Put some Band-Aids on your knees and get back hustling, okay? Because life ain't easy, all right? And for you little hustlers out there in the old Russell, not looking good for you. All red histograms, red slope line below the zero line, bearish control zone, 821 bear cost. I mean, this thing looks disgusting on the monthly. It looks really bad. Now, there is a big cluster of support all through here, so I don't expect this to just instantly go to zero. But like 145 level, I mean, we got the 0.5 at 153. We've got a bunch of candles through here around like that 145 level. God, this could get so nasty. I mean, let's be real here, okay? Let's assume that the markets continue to go down And they've shown us nothing that tells us they're not going to. Now, did they go up for a couple weeks or months before that? Sure, whatever. Let's just assume the trend continues to downside. If you were like, hey, pick one of the major indices that's going to hit the 200 exponential and simple on the monthly, this is the one. I mean, this looks like shit. God damn. I mean, it might as well just go to zero if it goes down that low. So we'll see what happens. Obviously, you guys know how I feel about the Russell. It's trash. And, also because obviously I'm like, counter everyone else. I just take the other side of every trade because most people are just wrong about just everything in life. Honestly, the old Russell, everybody's expecting the Russell to lead us out of this bear market and like it's growth over value and blah, 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 blah. All this like bullshit. Yeah, you're right. It's growth over value when interest rates are at zero for, a decade. It is. You're right. Correct. What about the rest of the time? Maybe double check your info on that one. So XLE is still very strong. Surprising, to tell you the truth, how strong this is. Because overall, oil prices are good, but they're not great where they're at right now. We were at like 120. Now we're at, in the 80s. But the actual like oil companies doing phenomenally well. So now we'll see if that continues. Obviously, the higher the oil prices are, as long as there's demand, the better for the, producers, etc., oil related companies. So that being said, not crazy to think this is coming up here to threaten the high. Now, the real question is, we have the 200 simple above the 200 exponential. The real question is, do we put in a new cycle high right here? And then that's a, short to medium term top. That's where my bet's at. I don't like to see a 200 simple above the 200 exponential as we're headed up here to make new all-time highs. I mean, that's like, danger, Will Robinson. Danger. Likely what happens, and this is where the danger comes from. Likely what happens is, if we break above this level right here, take out this cycle high, it's going to look like potentially, like a Wyckoff distribution type 2, where you basically put in a peak, consolidate around a range for a bunch of time, come up slightly higher than that peak, and then that's the macro top, come back down, distribution takes place in the range, and then eventually we break down from that range. It doesn't have to happen, but this is exactly what it looks like when it's happening. Now again, there's still a lot of different paths it could take. But I don't like the current one. Still have a red slope line on the 200, or on the weekly rather. Green histograms bouncing off the zero line right here. Still above the 200s, 200 exponential, very strong. We've saved the 821 from our bear cross right here. Definitely good. Very close to threatening the highs up here at about 89, couple of dollars off. Stokes powerfully angled to the upside. Knife is, looking like it's headed to the heavens. Not crazy to think that we're about to put in a new high right now on XLE. We have a ton of resistance at this level, like 100. I don't think we're headed up there. Well, I don't know. I mean, if we take out this high right here, we might as well hit 100. That's what I thought we were going a while ago, and we kind of fell short here. So definitely a possibility, but it's going to look like it's ready to roll over after that. We'll see. I mean, extremely elevated levels on the monthly. But what did we really do? We crossed 821 monthly to the upside. We reclaimed the 200 exponential. We reclaimed the 200 simple. We peaked out. We back tested for support. And now we're pushing back up here. I mean, guys, this looks pretty good. Like, it really does. Now, obviously, this is a key resistance. We basically have one resistance up here at 100, and then we have the one we're at right now. So if we break through that one, I mean, there's nowhere else to go but 100. And then after that, blue sky breakout. I mean, I'm not going to be bearish. I'll tell you that much. I mean, I'm not bearish mid to long term. Short term, though, man. I mean, we got that hard sell signal and left the bullish control zone. So if we push up here, put in a new high, we're going to print bearish divergence on this. A back test of the pink stochastic, possibly even a bull cross, and then rejection and roll over. This does not look like, this is not what I want to see as we're approaching a breakout. I mean, this would happen. Hard sell, left the bullish control zone, complete meltdown. Hard sell, left the bullish control zone, a little itty bitty meltdown. Hard sell signal, left the bullish control zone, complete meltdown. Hard sell signal, left the bullish control zone. I mean, we got one right here too. Not as clean, but, and then we got it right here. I don't love that. Now, it doesn't mean this can't be a false signal and we can't just shoot to the upside, but man, we don't have much energy left at these types of levels. It is possible we end up getting like a little bullish reset and continuing to the upside. But it looks more likely to me that we're probably going to put in a new high and end up printing some bearish divergence. Unless we get strong continuation, but I don't know. It's tough. It's tough right here. Where's that extra pop of energy going to come from? Where's the extra demand going to come from? You know, it has to be either, you know, earnings or, you know, valuations or multiples. I mean, what's going to be the burst? I don't know. We'll see. It's very hard for me to think that we have another leg up short term in energy. I think everything is predicated on us having like a terrible winter and everyone's like freezing to death and like there's not enough energy and the world's like coming to an end. So if that scenario doesn't happen, it's sort of like the opposite of every other asset. It's hard for me to think that's going to happen. You know, everybody else is just assuming. I don't know. If we go into a recession or depression, we know exactly what happens to oil prices. We know what happens to demand, I should say. It falls off a cliff. And, you know, XTN transportation, putting in new lows, almost no pop off the lows, trying to get a little 821 cross, back testing resistance. If we burst through this resistance, we cross that 821 back to the upside. You know, we've got some more resistance around 73, 76, somewhere around here. Again, just looking for a new lower low and another back test at 200 exponential and simple. If we can't break above them, after that, you know what's coming. You know, a new lower low. Longer time frames, weekly, I would expect us to push back up here to about like 72.21 or something like that to retest the 200 exponential and simple. Again, I'd be looking though, do we get rejected and come back down and put in a higher low, or do we get rejected, come back down and, you know, start breaking to the downside? Again, potential bullish divergence developing. See, every one of these markets is looking like exactly the same. So it's very easy to just look at a couple key ones and then just be like, okay, it's just doing the thing that everything else is doing. Backtesting key support levels on transportation. No surprise here. You know, this is basically, we have a peak right here and then we sell off pretty heavily and then we have a new bull run and then we come back down. We backtest the peak. It holds. We start a new bull run and it fails. Comes back down to that previous low. And then again, start a new bull run. You know, it peaks. We come back down and now we're backtesting the previous support. So if it does what it did right here, you know, we find support, potentially move to the upside. If it does what it did right here, you know, the meltdown could potentially happen. So which one is it going to be? Are we going to find support, continue back to the upside, and all of a sudden, you know, transportation is booming again? Or do we just enter into the bearish control zone for the first time ever on this chart, going back to like 2011, aka the age of the dinosaurs? Bunch of red histograms, red slope line below the zero line. First time ever in existence in the bearish control zone. 821 bear cross. Even when the 821 bear crossed here and here, in our peaks in 2020, or our troughs, I should say, and 2016. Even with the bear cross right here, we never made it to the bearish control zone. And the knife stab down here, like pretty aggressively to like the 13 level, about where we're at now. Well, we're even lower than that. We're about 5. The knife stab down here, basically like -12. Keep in mind also, the knife is not constrained by the rules of the universe. Okay, it can go below 0 or above 100. And you're like, what? It should be out of 100. That doesn't make sense. And I'm like, I do what I want, motherfuckers. So, I mean, is it possible for the knife to go up to 1,000? Probably not. But maybe on like a 1 second time frame for Bitcoin or something like that. SMH semiconductors, you know, bouncing that key support level, hitting our fib perfectly. Trying to carve out a bottom at the 0.5. Seems likely we're going to backtest the 382. Could we bust through the 382, burst through that resistance, and then hit the 200 exponential and simple? Yeah, seems likely if we get a little continuation, start to build some momentum. Again, bullish divergence. This is, you know, printed. This isn't even like developing. This is printed. We have a lower low here. Then we did the previous low. And obviously we have a lower low here. No, I said it the other way around. We have a lower low on the indicator oscillator the first time, and then a higher low the second time. We have a low on the price action, and then we have a lower low the second time. So bullish divergence has printed, hard buy signal coming out of the bearish control zone. Seems likely we're headed back up here to like 201. Retest that. I mean, that's not a bad move either. That's like 8 or 9%. Semiconductors getting just absolutely wrecked lately too. So, but overall though, I mean, longer time frames. I mean, this stuff just doesn't look good. It looks like we basically just lost the 200 and now we're back testing it. So if it acts as resistance, not cool. Weekly bullish divergence potentially developing here. Only one histogram so far. And then on the monthly, I mean, this just looks ready for a full-on meltdown. You know, broke down, back tested, new lows. Broke down, you know, we're going to come back up here and back test. I mean, this pretty much is indecision doji candle as it gets. If it closes like that and you're like, so what do you think's going to happen? I'll be like, I don't know. I'll tell you in a month. Because it's basically the market saying, you know, half the people are buying, half the people are selling. When it's all said and done, the price didn't go anywhere. So that's about as even a tug of war as it gets. It's not like one of those videos where somebody does like a tug of war against a lion and it like throws them 30 feet. I'm probably the only person who watches weird videos like that, but pretty damn cool how strong a lion is. XLU is next. Utilities. So, I mean, we know what utilities means. When we see utilities, you know, getting railed like this, well, this is supposed to be safety. Going into recession, things are bad. So if all of a sudden people don't want utility safety anymore, you know, it's because they want like risk on environment. So where's the money going? Is it going into the bond market? Well, the bond market's melting down. Is it going into the stock market? Well, we saw a little pop recently, but this is a pretty decent meltdown here. They're having a short period of time from 78 all the way down to like 60. That's a BFD right there. Hard buy signal, a bunch of green histograms. What are we doing though? We're just back testing resistance before we take another leg lower. We broke down from the channel we've been in for the last like, you know, decade. Hit the 382 perfectly. Seems likely we get a back test. If it gets rejected, headed to the 0.5. So next target to the downside would be 58. Likely get a little upside before then. This is a big deal, what's happening in utilities right now. And you're like, explain it. It doesn't make sense. It doesn't make sense to me either. I would think right now, I mean, this tells me the market's like, actually, things probably aren't as bad as we thought. So I guess we don't need safety anymore. I don't know. Pretty powerful push down here. Momentum definitely in the bear's favor at this point in time. I mean, still bullish above the on the 200s, but we broke down below them. We're at support right now. We're below the ascending support channel. Now, we did have a situation like this where we break down and then reclaim it, but not what you want to see. I mean, that monthly could get disgusting. This could be a race between the Russell and the XLU for who gets to the 200 monthly faster. Because they both look pretty damn bad. God, look how disgusting this is. This is the like double bear divergence signal. Like sell by sell is like, oh shit, that's a wrap. It's about to melt down. Sell by sell by sell, that's the thick sell off. I mean, obviously it was a beautiful signal too. But damn, that's brutal. I mean, this is the best way to see it though, is like literally touching each other like that, or like equally spaced out. If there's like one space between each, the more like orderly that prints, the more reliable it is, in my experience. Next we have XLP, consumer staples. Again, perfect touch of the 382. This is so coincidental that literally everything sold off to a new low, hit the exact support levels that we were expecting, and then has bounced from them. It's almost like some sort of like, I don't even know. It's like a not thought out, some kind of like just an instant thing that happens when someone else acts. You like, what's a word for react? Oh my God, it's a reaction rally, a dead cat bounce. Oh my God, that's so weird. What? No way. I mean, I don't know. That's what it looks like to me. When you literally come down to a level that everybody's expecting you to come down to, and then suddenly you see a temporary short or medium term reversal. That's weird. Definitely a reaction going on there. So didn't quite get down to the level I was looking to take a buy on. So we did miss an entry on this one. It hasn't really gone anywhere yet, but we shall see. Again, super safety stock right here. You know, people still need the stuff and the things as well. You know, even if it's a recession, people still need what's in consumer staples. You know, Coca-Cola and Pepsi, and you know, they're probably gonna be eating ramen noodles. Sorry, that's not funny. No one should have to eat ramen noodles. It should be a choice. XLP on the monthly, bunch of red histograms below the slope line. Stoch's melting down. We haven't crossed the 821 bearish yet. So, this has been holding up. So technically it's doing its job. Technically it's holding up better than most stuff. And that's what it's supposed to do. It's supposed to outperform in bear markets, in recessions. And by outperform, I mean it goes down, but not as fast. I mean, this could get brutal, though. 821 bear cross happens. I mean, here we just got a straight meltdown, and then it got bought up aggressively. People don't bet on a market on like a V bottom. In my opinion, I don't think it's a good idea to bet on a V bottom. Not this time. Could be wrong, but I think too many people are expecting the V. Jay Hoff in the chat with the XRP. I know you like that XRP joke, dude. I lost 3 subscribers when I mentioned bad things about XRP, so I hope it was worth it. I'm just kidding. They all left a long time ago. They were like, he's so mean. But also XRP is still trash, so I was right. So you're like, but he's right, but he's also mean. That's a fair assessment. So Bitcoin on the daily. I mean, look, let's be real. It's hard to get excited about this. It's been going sideways for so long. You're like, oh, but we're about to get the 821 bull cross. That's good, right? Well, it failed right here. It fell right here. We had a nice run right here. So if it's going to be like this, I don't really care. If it's going to be like this, okay, now you got my attention. So how do we figure out which one's going to happen? Well, if we see here, we basically have been trending. Stochastics have been putting in higher lows consistently along the way up here. Now, I don't typically do like crazy amounts of like drawing on the indicators, but I mean, you can. It's not like they're not viable. It's just usually something else is telling me like the same thing. So, to just get our point across, obviously we have a low right here. We have a higher low right here. We have another higher low right here. We have a high right here. We have essentially the same high, slightly higher high right here. And now we're headed back up to that level again. So if we come up here, we put in another higher high right here, we better put in a higher high on price action, or we're going to be printing more bearish divergence. But the point is that we're slowly creeping to the upside. The histogram is going up this whole time, since essentially August. And price action since August is basically flat. I mean, here was us at the lows in August, and here was us at the lows like a couple days ago. So we've just gone sideways basically for months, and the indicator oscillators are trending up the whole time. The blue slope line tells us we're in like a bullish uptrend right now. We have higher lows on the histogram, and yet price is going nowhere. Price action is going nowhere. So do I think that this comes back down here, test this, find support, and then we get another push up here to another lower high, like 20,000 or 20,000 and some change, something like that? It seems likely to me right now that that's what the market's going to try to do, but I'm not sure that's a good thing. I think in all reality, here we printed a massive high right here and a much lower high here. Here we had a high and then a slightly higher high. That's bearish divergence. Where did the bearish divergence lead us to? Just right back down to the bottom of the range. Nothing crazy. We did get a pretty aggressive wick, but it got bought up. So if we do the same thing again right here and we print bearish divergence again, we're going to have 1, 2, and then a third drive of bearish divergence. That's not necessarily a good thing. So the last thing I want to see happen right now is the indicator oscillator continue to trend up here and put in a new high, aka get above like 67, and price action not come up here and put in a new high above 20,400. So that's going to be the big level everybody's paying attention to. Do we take out this previous lower high right here, and then do we print bearish divergence if we don't? Very, very important, but nothing has really changed. We've been talking about it for literally months. And you're like, this is so boring. Bitcoin never does anything. And I'm like, I know, right? It's total trash. I know, right? But I mean, look, still in the channel, doing the thing, getting squeezed between the white resistance, the yellow resistance, the 200 exponential and simple moving averages, and the ascending support line in green. But I mean, what are we doing? Flagpole down, consolidation, and then what? Flagpole down again? Yeah, probably. I mean, probably. This thing needs to fucking get off the lows and actually break out. It's using all its energy just to stay alive, okay? If I'm like strangling you to death and you're just like using all your energy to stay alive, when you stop using your energy to stay alive, you die. So that's what's happening to Bitcoin and crypto right now. They're being strangled to death and they're using all their energy just to stay alive. So the second that they run out of energy, they die. you know, and that's a shitty way to die. I would not want to be strangled to death. I don't know though. Would you rather be burned alive or drown? Oh, I think they're both equally shitty. I think during the process, like being burned alive is probably worse. But I've also heard that if you drown, your like brain is still alive for like, you know, 30 seconds. Probably feels like an eternity. There's a little like fish already kind of like coming over, biting at your hairs and stuff. I don't know. Not cool. Not cool. I think probably I'm gonna go. If I had to choose, they're both so appealing. I'm gonna just choose not to be burned alive. So I think that would probably be the worst. So Bitcoin, of those two, I'm sure there's way worse things. Bitcoin on the weekly, at the lows, looks terrible. Bull cross right here, goes nowhere, ends up back down here in the bearish control zone again. Threw up in my mouth a little bit when I look at the Bitcoin chart. It's that shitty. Well below the 200s. 200 simple is almost flat at this point in time. I mean, we need to get a pushback up here to like 22,000. 24,000. I mean, I don't know. I don't know if it's going to happen. Everybody hates crypto now. It just sucks. Nobody wants to buy it. It's so weird. I thought it was the future, right? All green histograms. Below all the moving averages. God, Bitcoin looks like trash. And the monthly, new lows. Indecision candle at the fucking lows. Like, god damn. Can't Michael Saylor get a loan or something? Can't Sam Bankman-Fried and Michael Saylor team up to like bail out the crypto market or something like that? I think Michael Saylor probably needs a bailout, so maybe not. Can't Sam Bankman-Fried like raise a couple $1 billion and then just buy Bitcoin with it to like prop up the prices? I mean, he's got vested interest in this, you know, not a Ponzi scheme. So I would think he'd get to it. Maybe that is what's been happening though, and it's just not working. Bitcoin on the monthly looks like trash. Back testing the peak. I mean, look, this is it. This is our crutch, okay? And like, I feel like the whole entire crypto market is like leaning on a single crutch, and the crutch is like not one of the like new school kind of like metal ones. It's one of the ones from like the 60s. It's like made out of wood, and it's not like finished wood either. It's like some junk. And right now there's like what eats wood? Woodchuck. There's like a little woodchuck down there, like kind of chewing it away. So like the only crutch, the single candle that's keeping us alive right now is being chewed on by a woodchuck. Okay? You're not going to get that kind of comparison on other channels. So I hope you appreciate what you guys got here. 14K, man. I'm telling you. Bitcoin is... it just looks so bad. In the bearish control zone. And you're like, yeah, but the last time we were in the bearish control zone, we bottomed. Yay. And the time before that was the bear market. We bottomed right there, too. So that's it. We're at the bottom right now. We either are at the bottom, and it's just going to look so obvious in hindsight, or this thing is about to capitulate, and people are about to get wrecked. Because right now, people are saying, oh, we never bottom. We never put in a new low after the 8 and 21 bear crossed in the 4-year cycle. Every time we did that, that was the bottom. So far. But if you were like, hey, I'm going to shoot this gun at you, and I'm like, I don't think that's a good idea. And you're like, no, it's cool. It'll totally miss you, I promise. And I'm like, you're like, it'll miss you by like 30 feet. Okay, I'm not even like shoot it in your direction. I'm just kind of going to shoot it like that way. That's not as scary. That's like, but if you point the gun directly at me and you say, hey, I'm going to pull the trigger on 3, like get out of the way, okay? That's not cool. Well, that's like that's the difference between, you know, the bullet being 30 feet away from you and being, you know, hey, get out of the way at the last minute. The bullet is right here. We're at the lows. Like, we don't want to be just hanging out at the lows and then be like, oh, everything's cool now. We're just going to hang out here for a bit. We're definitely not going to go any lower. I don't know. This looks so bad. Crypto looks so bad. Maybe that's it, though. You know, the night is darkest before the dawn. Like, Batman's going to show up any minute and Bruce Wayne's going to rescue crypto. That's possible, actually. Doesn't seem likely, but obviously Batman's real, so. Ethereum. Elon Musk is kind of like a wannabe Batman. He's like launching spaceships and like building electric cars and shit like that. I'm not sure we want him fighting crime, though. I think, like, honestly, no offense to Elon, I'm sure he's like, you know, a tough guy, but I think probably just like any old crackhead could just take him down. So I don't know. Need to get a better Batman than that. Ethereum on the daily. I mean, still holding up right here. That's good. We're getting the bull cross, 821 back to the upside. We talked about this potential scenario. I don't want to get people's hopes up or anything, but the 1, the 2, the 3 in green we're looking at, the green one right here, not the white one, not my base case. We're looking at the green one. The 3, the 4, oh, hang on, but wait. We put in a new low, but only by a wick. We didn't close lower, so we held above the 1 with everything but a wick. That's acceptable. So technically 1, 2, 3, 4, 5. Ethereum going to 2,500. Ethereum about to bust nuts and bears butts, if you know what I'm saying. Maybe. We'll see. Something like that, you know. It's just setting up, it's consolidating, it's waiting, it's just ready for burst to the upside off that 618. Here we hit the 618. Here we hit the 618. I don't know. It's probably just going to go to 0. Ethereum's trash. But it could go to 2,600 first. And you're like, which one is it? I wish I knew. Ethereum on the weekly, just finding support at 200 simple. Slightly higher low. What would the back test be? 1,584. I mean, it would look pretty freaking, yeah. I mean, that would look so textbook. We would basically be back testing the 1 from like our potential 5 waves down. So that would be okay. It would be a 1, a 2, a 3. The 4, instead of just stopping right here, the 4 would actually go all the way up to 2,500. Everybody would think we're bullish because we just took out the previous high right here. And then what happens? We just melt down and roll over. And everybody's like, what the fuck just happened? Oh my God. And we put in a new low after that at $600, maybe 500. Oh, that would be brutal. And if there's one thing the market's good at, it's taking people's money. So that's probably what's going to happen. So just get ready for that. Bearish control zone, 821 bear across the downside. Ethereum looks like trash on the monthly. Does not look good. What would that look like? I mean, people would, if we shot up here to like 2,600, people would 100% think we're back in a bull market. And that would be wreck city if we're not. Crypto weekly total market cap. It looks exactly like that. $900 billion. What a trash market. It's not even a trillion. Pathetic. Pathetic crypto. Below 200 simple, below all the moving averages. All of them are negative except for the 200 simple, which is barely hanging on. A bunch of green histograms, we got nowhere. We're at the lows. The histograms have trended all the way up from negative 257 up to negative 110. And the trash crypto market cap is still at the same level. So there's any money that's coming into crypto is coming out of crypto first. So you're like, oh, I'm going to sell my Bitcoin and buy some cum rocket. And you're like, no, I think I'm going to buy some Tetheris. I'm not even gonna lie. When I saw Tetheris so many different times, or what? No, Binanceus. That's what it was. I saw Binanceus so many. I was like, what the fuck is this? I'm like, is this like a Spanish Binance or something? It did not occur to me that it was just Binance US. So, you know, we all have our moments. Sorry, I thought that was funny. So crypto market cap on the weekly, I don't know, man. Looks brutal right here. We already tested at 755, which was our target, which was the previous high from like the 2018 peak right here. So we got a nice little reaction rally off that for another lower high. If we break down from here, we come back down to that level again. There's not much holding us up from that. Oh man, let's hope it doesn't come down to that. If we break down from here though, you know, that's where we're going. $538 billion. And that's just a monthly high right here. Obviously we're on the weekly, but let's hope it doesn't come to that. I mean, that's crypto projects blowing up left and right if that happens. Bitcoin dominance with everything included on the weekly. Still trying to creep up here. Having a little trouble, but back testing the 21. If it hangs out here long enough, it's going to burst to the upside. It's going to get the 821 bull cross. It's already got multiple green histograms, blue slope line, trying to threaten the 0. Coming out of the bearish control zone, hard buy signal. Bitcoin is trying to build up some momentum right here and take some market cap. So Bitcoin right now getting ready to like stomp on little altcoins. Now, what does that mean? Does that mean Bitcoin's going to the moon? Does that mean the altcoins are going to 0 and Bitcoin's going to like slowly go to 0, but not nearly as fast as the altcoins? Yeah, probably that one. Bitcoin dominance on the weekly, less stability coins. So we see now we take out the stable coins and Bitcoin's already bullish. 821 bull cross has happened. We're like literally a clusterfuck right here. Technically, green histograms at the blue slope line, slightly above the 0 line. So again, technically bullish. Hard buy signal coming out of the bearish control zone. Yeah, looks like Bitcoin's getting ready to take back some market cap. So maybe Bitcoin is setting up for just a big burst to the upside, but probably not. The only thing bursting is Michael Saylor's bubble because he just lost $1 billion. Like a bitch. Hey, we did it. All right. So let's finish up here. We got a couple of member requests. We'll look at gold. Nothing happening at all. Slightly higher low right here. Doing nothing. Technically didn't print bullish divergence since they're both higher lows. Backtest to 21. I mean, best case scenario right now is gold tries to work its way up to 1772 while, risk on situation happens, but I wouldn't count on it right now. Gold is not looking good. Silver, again, very, very weak. Broke out, couldn't hold support. Kind of did a little bit here on this descending support line, but didn't quite hold this level. Put in a lower low based on that blue ascending support line, which is not good. That we talked about. That was basically like the no-go level. If we violate that, it's bad. And we did it, so it's bad. Yeah, silver, trash. People are like, but the shortage. Andy Schuckman says there's no more silver. Oh, really? Just out of curiosity, like, he doesn't happen to like sell silver or anything, does he? Well, yeah, he does. He's even gonna sell me some of his because he's a good guy. Oh, yes, he's gonna sell you some of his silver, and there's a shortage. Okay, all right. You want to buy a bridge? Because I got one of those for sale. I can name it after you and everything. GSG commodity index for the GSCI still fighting to reclaim the 200 exponential. If it does, it pushes back up to the 200 simple about 22.32. It's making up its mind right now. So I'm getting a little more clear of a picture for this because the commodity weighting, energy, this looks more like something like the oil chart does, which I think is probably a more accurate representation than looking at something like XLE or, LNG. LNG, Cheniere Energy, liquefied natural gas proxy. We have obviously the high right here. It looks like we're coming back up here again. Potentially setting up for another drive of bearish divergence and a clean rejection. A fucking clean rejection. So watch out for that one. New high followed by a violent breakdown. Oh, you know what I didn't mention earlier too is earnings. So we'll have to talk about that. So Mosaic Company, the fertilizer, just doing what we said, back testing for the 200 simple right now. So as long as we're between the 200 exponential and 200 simple, nothing changes. The key thing I'll be looking for is a back test, breakthrough, and then an attempt to push up here and put in a new high above the 618. As of now, we have a high, we have a low, we have a lower high, we have a higher low. So this is looking more like a bullish consolidation for now, until we either take out this lower low right here or we get a bullish breakout, in which case we were right. URNM, pretty accurately telling the story of uranium for now. High, low, lower, low, lower, high. Hasn't put in a lower low yet, but I mean, look what happens every time. We come down here, we put in a low, we come back up, we put in a lower high, we come down here, we put in a lower low. But really, this is just one move down. It's just the market breathing in and breathing out along the way. So right now, it's like, oh, we didn't put in a new lower low. It's bullish. Well, I mean, is it? Or we breathed out. Now we're breathing back in. And then we're getting ready to breathe out again. Go to new lows. That's what I think's happening. CCJ was lying to us for a while. And then eventually the capitulation took place. No surprise there. Looks like we're going to get that back test to 26 or something like that. Seems likely. No surprise here. Overall, though, we do have just a series of higher lows right here. Now, the difference between this one and this one versus this one and, this little cluster right here versus this one here, we see the lows. We're getting closer and closer to the previous low every time. That's not what you want to see, because eventually we break down through that low and then we have a high, a low, a lower high, and then a lower low. So, CCJ still holding up okay for now, but got to be careful. So Tilray, we've been talking about this one quite a bit lately. about this potential for like just a massive crazy move. 300%, probably not going to happen. But I think the realistic trade here is just saying, hey, probably we come up here and test the top of the range, 30%, not bad. Probably we back test a 200 exponential and simple, 30 to 50%, not bad. So is that just the start of the trade that gets us into this 300% potential trade? That probably like fails, underperforms, and rolls over. Sure, but I mean, it doesn't mean we can't turn a 30% into a 50% into 100%. It doesn't have to go 300% for it to still be worth it. So I think what I'm looking for on this one is, essentially, I'm going to just look at this as just an itty bitty little trend that we're starting to build here. Where we have a low, then we have a higher low. So I want to see this keep creeping up. I want to see the 821 stay crossed. I want to see the histogram stay above the slope line, above the zero line. I want to see the histogram flip blue. I want to see this hard sell get reversed and turn back into a hard buy. And I want to see, my position go up by 30 to 40%. So, yeah. So what are we looking for realistically? I mean, let's say 30% upside. If you want to have a conservative downside target, you can use the slope line. If you want to have a little more honest downside target, use that previous little swing low here. So 14% downside, 31% upside. It's only 2.2 to 1. We're clearly in a bear market. We need 3 to 1 for it to be functional. So, technically not an acceptable trade. Now, if you run a little tighter and use the ascending slope line, or you get a slightly better entry, that's a much better trade. But so yeah, I mean, I think that's really what it comes down to. You got to either run the stop loss tight at about 8%, and then you get like a 4 to 1, or you got to get a better entry down here. So I think realistically, I'll probably just do 2 entries into this one. One basically like where we're at, depending what happens, obviously in pre-market or whatever. But one basically or extended hours. One roughly where we're at. One roughly lower right here. Obviously, I'm not gonna like sell and then buy down here at the same spot. But I will like essentially just average out the position. If we hit the second entry down here, and then that makes the risk reward still favorable. And then that way, if it runs away, we don't miss out on the trade. If it sells back off, we don't just get stopped out. We kind of like benefit if it goes a little deeper. And then, we don't benefit as much, but we still benefit nicely if it doesn't get down there. So it would be something closer to like this, where, we close a lower low before that. That gives us a 8.7 stop loss with a 38% upside. So something like that is what I would be looking for. And then just kind of averaging those out. And then again, taking some profits here at resistance at the 200s, etc. If and when we get up to those levels, moving our stop loss back to break even if and when we get above those levels in profit, so we don't turn a winner into a loser. But definitely some potential here. Some of the other pot stocks look equally good or even better. But I mean, this is a pretty clear, defined downtrend. And we basically just touched the all-time lows. Like, you guys know I'm kind of greedy. I want it to go slightly lower just so everybody's a loser. And then I'm like super interested because I imagine there's probably a bunch of people that would just get stopped out at that level or sell or capitulate or whatever. Didn't quite get there yet. Doesn't mean we're not going there. But I think there is some potential for some nice scalps here, especially if we go on a nice little bull run. I'm not sure that pot stocks are going to just like explode like and outperform everything. But they're so wrecked right now. Same with like gold and silver miners. They're so wrecked right now that if there is a rally in the markets, they might not recover as much percentage-wise of their like total sell-off from all-time high to all-time low. But I mean, they could easily be going up like 30, 50, 100% because they're just wrecked. A lot of them have went from like, triple digits to single digits. I mean, that's opportunity. Or, they're going to zero. Either one. 50-50. Probably some of both. Baba, aka China, put in new lows again. So the lowest low in the entire cycle for literally like years upon years upon years was on Friday. So people are like, yeah, but it's the support and it's a green candle. Okay, congratulations, there's a green candle. Wow, we're in a bull market now. One day green. Like, we didn't also put in a new cycle low on the same day, did we? Because that wouldn't be a good thing. Like, well, we did technically. I mean, sure, we put in a new low, but the candle's still green. Woo. Fucking people are so stupid. Yeah, China. I mean, obviously, I've been ringing the bell on China now for literally this entire fucking way down. People still aren't listening. They're like, China's great now. You think there's that everybody else is just like selling everything to do with China just for the hell of it, and you're just like the smartest guy in the room, you might be right. Could be right. Better be careful though. Haven't been this low since 2016. This is what we call the round trip. You're like, oh, things are great. I'm going to the moon. Oh, I ended up back in the same spot. Oh. We took a wrong turn at Albuquerque. And now we can't afford gas. This vacation's ruined. Neo, new low. But the candle is green. So in Neo's defense, it's a green candle. So I'm sure things are fine. As long as they have a good earnings report, I'm sure everything's going to be going great. It probably just, that was probably just the lows there yesterday. The lowest low of the entire cycle. That was probably it though. After this, it's all up. All right, so we've got some requests here. And then I want to talk about earnings for a second there as well. So we've got ECVT. Ecovist. Inc. All right, so I'm just going to assume. Oh my God. How did I know? So we've got some price action back from 2017. We just put in a new lowest low ever on the monthly. Pretty aggressive bull candle after that, a backtest of the 8. 1 green histograms. We're still in the bearish control zone. So monthly looks pretty disgusting. It's not technically a bullish engulfing candle, but pretty good candle right there. What I see when I look at this chart is something that's on a path to zero. It's not going as fast as it can, but it's going pretty fast. It's definitely doing a good job. We broke down from key support right here, and now we're backtesting it, so it makes sense. We lost support, backtesting it as resistance. If it acts as resistance, we likely put in new lows. Earnings are coming up. Last 4 earnings were pretty good, but we somehow still just kept putting in lower lows. So, God forbid that it's not good. That could be really, really bad. Now, is it actually trying to carve out a bottom here? So on the weekly, we have obviously a pretty big histogram stab down here. And then we have a lower low with a less aggressive histogram stab. It also lined up perfectly with the slope line, which has flipped blue. So we have bullish divergence on the weekly, clearly playing out as we speak. We have a pretty aggressive knife moving to the upside here, after a pretty aggressive knife moving to the downside here at literally the lowest low. So the knife is saying, hey, there's actually could be some legs on this rally. The weekly, it'll be a bit before the 821 crosses back to the upside, but if we get above that like 1026 level to like 1050 level, this thing could surge. Now, obviously none of this is financial advice. I have no idea what this company is. On the daily 821 bull cross, we shot up pretty aggressively off that. We've done that quite a few times and every time gotten rejected at the 200 exponential and simple. So the real question is, we're at 967 now. If I'm not in a position, but I'm looking to potentially enter one, I got to see us get above $10, consolidate, and then potentially flip the 200 exponential and simple bullish again. That's what I'm looking for. Stochs are trending to the upside. Histogram is green above the zero line and a blue slope on the daily and the weekly. It's definitely building up some momentum here, trying to push back up. Now, this is a very, very strong resistance level because we have all of these lows right here. And this is a very, very strong resistance level, obviously, because of the 200s. So that's what I'm looking for. So if we just take a fib and we just throw it at the recent, this is obviously a very, very clear swing high. And, let's just assume for now this is going to be a swing low. Now, we don't know that's the case, but the first thing we look for, it might not be clear. Probably see that a little better. The first thing we look for is to get, above the 236. We want to backtest, tag the 236, come back down, put in a higher low, and then we start looking for the 382 for our next target, which would be $11.36. And then obviously the 200s lines up perfectly with the 236. So, that's the level to watch. Can we get above $10, consolidate, and then, 200 exponential and simple have an almost flat slope right here. So is this thing getting ready to just run back into a bull run? It's possible, but let's be real. This looks like shit. Now, there is potential for a trade here. A scalp. I almost said investment. Sorry. Something makes me want to gag when I talk about investing in charts that look like this. Doesn't mean it's not good, though. We talk about pot stocks, obviously, all the time, and they look pretty fucking bad, too. So, That's probably what it is, actually. Now, in hindsight, looking at that chart, it is probably a bot stock. they're, they're the worst. All right. So I'm sure this one is going to be in a raging bull market right here. I mean, I know you guys only pick the most bullish stocks. Not. I love your guys' stocks. I'm like, where are you guys buying these things? They're like, I was digging in my yard, and I found ticker symbol VVPR, Vivo Power International PLC. So, oh man, where do we start? So the first thing that jumps out at me on this one is the fact that we're literally at the lowest low we've ever lowered. Okay. If you were like, oh man, see how low you can get. And you're like, okay, I'll try to get as low as I can. You're fucking winning. Okay. VVPR is crushing it. This is the lowest low it's ever been. It's literally breaking records. Probably people's piggy banks as well, whatever this is. So, yeah, not cool. Not cool. The lowest low it's ever lowered. All red histograms for literally ever. You're like, I think I'm going to hang on to it here. It's got some bullish fundamentals. Oh, nope. Now the 821 bear cross. Now the all red histograms. Now the below the zero line. Now the lowest low. Oh, God. So somebody's probably hodling this. Or maybe they're just looking for an investment now. I don't see any signs of it bottoming or anything. It could have pulled like a little Tilray and tried to bounce a low again, like it did right here. Obviously we just saw the Tilray chart and it came down to the lowest low ever and then just bounced. But the new lowest low on the monthly, not cool. Even if it's just a wick. I mean, if it closes at the lowest low ever on the monthly, you might as well just whatever this ticker is, write it down on a piece of paper. Okay. Look at it for a minute. Think about what it's done to you or how shitty the chart looks. And then go ahead and just crumple it up, throw it right in your trash can and never ever look at the chart again. Because, god damn. 57 cents this thing is at right now. And it peaked out back here at $24. I mean, arguably, we don't want to exaggerate. 15. We'll say 15, give or take a wick. It's at 57 cents. So, I'm guessing whatever this is probably not making any money. I don't even know if they have any income. I mean, whatever this is probably just burning cash. So, yeah, that's what I would be looking out for. Yeah. So it doesn't make money. It did well in a zero rate environment. And just give back everything and more. I would just assume that this continues to go on making lower lows until it either hits zero or eventually doesn't. Whichever one of those comes first. But so far I see zero signs of it not making lower lows. So I would just assume it's going to zero for now. Yeah, weekly, probably going to look pretty damn bad too. Yeah, I mean, blue histogram, or green histogram's above the slope line. The slope line is blue. So it's like bullish momentum as it melts down to all-time lows. That is not good. Bearish control zone below the 200s. I mean, disgustingly below the 200s. Couldn't even come back and get close to them. I mean, okay, here's the truth. The first thing that has to happen for this is it has to recapture at least one of the moving averages. So depending on if you're looking at the daily or the weekly, you're going to miss out on a big move before that happens. But if it actually does happen, the trend is going to be so much more valuable than the first 20% you miss out on or whatever. Because the potential for, and this thing will never go to new all-time highs again. I'm just assuming. I have literally no idea what it is. But 2,912%. Probably never going to happen, but, it's down so much. Doesn't mean it can't just go down another 50% or 90%. I mean, this thing could be at 5 cents. Not crazy to think. I mean, I don't know. I'd be real careful with this. Anything making the lowest low it's ever made, ever. Like yesterday, it was like, oh, what are you doing today? And you're like, I'll probably just make my lowest low ever. Oh, cool. You want to invest in me? I don't know. What are you planning on doing tomorrow? Well, I mean, I'm not sure yet. I don't like to plan ahead. Well, what'd you do yesterday? Well, I made the lowest low I've ever made. Well, what about the day before that? Well, I made the lowest low I've ever made. And the week before that, well, lowest low ever made. For me, my personal best. Yeah, not cool. It probably bottomed though. That was probably it though. I'm sure it's not going any lower. So I'd be real careful. Look for some kind of momentum or some sign that it's recovering before I just jump in. Because I'm sure there's been people probably buying the whole way down, and all it's done is just gone closer to zero. Oh my God, what is this? QNGY. Quanergy Systems Inc. Okay, so this one's promising. You guys constantly outdo yourselves. I mean, you deserve respect for this. I don't know how you find consistently the worst charts ever, but it is fucking amazing. I'm not even mad. Do you have like a worst ticker, like search or something? This is insane. So yeah, I mean, it's definitely not making higher highs. It's making the lowest low it's ever made. So this is what you want to get out of the way of. Okay, because it makes its lowest low here, and you're like, it's probably the bottom. Oh no, again, this has got to be it though. Well, maybe that was capitulation. I don't know. That's a pretty aggressive sell-off. There's a little bit of a wick at the bottom. 8 days to go. Yeah, disgusting. Oh my God, look at that. Look at this volume spike right here. I mean, the only way this volume spike happens is if there's buying and selling going on. So clearly there's somebody buying at the lowest low ever. And clearly there's someone selling at the lowest low ever. You know, could be forced selling, obviously. But, you know, I mean, volume spikes tend to be tops and bottoms. And this is, if I've ever seen a volume spike in all of my life, this is a pretty big volume spike. So the question is, you know, is this a big volume spike from, like, you know, who has enough selling power in a company like this, which I also don't know anything about? Who could possibly spike volume that much on the sell side? Only insiders, only like key players, you know, like CEOs, like, you know, founders, early investors. That's the only people that could cause a volume spike like this. So we have to assume that there's potentially some of that going on. Founders dumping, which is never good. Or this was forced liquidations, and then this is a lot of this volume is actually buying, which is possible, but why didn't we see any volume even remotely close to that here? Because for the candle to still go down, but have, you know, a decent little wick to the upside, decent little wick to the downside, and then be right back where it's at, that means there's literally people buying and selling. So it's possible some of it was forced selling, but a lot of this is probably actual real selling as well. Don't love this. I don't love it. But there is signs that this could actually be the bottom. But goddamn, I would wait for more signs. Green histograms above the slope line, that's good. Slope still red, still in the bearish control zone, below all the moving averages, literally putting in the lowest low it's ever load. You're like, man, I mean, we back tested the 8. So if we close back above the 8 on the daily, that's a good sign. That's the first sign I would look out for. And then you're like, okay, look, we're back above the 8. You know, play it to the 21. We're talking about, you know, essentially a potential buy at like $1.90 and take profit at like 284. About a 50% move. But, you know, and sure, you could just take a stab at it right now, but I mean, I would just assume it goes down from here until it does something otherwise. So sure, you miss out on 26% if you wait for confirmation. But, I mean, you have so much more confidence in the trade. Couple green histograms, it's okay. Big pop already happened. Gave back the majority of the big pop. I would at least wait to see how this monthly closes. Could it be 30% higher before that happens? It could. Definitely. But, I mean, it could be 30% lower. And it's in a very clear bear trend. So, if I got a bet on where this thing goes, the longer you're in this, the lower it goes. I mean, factually, so far. So I would be betting against this. The last thing I would be wanting to do is trying to catch a knife on this thing. Because, goddamn, everybody that's ever tried to catch a knife on this got wrecked. I do like that volume spike, though. You know, which, again, now that we look at the shorter time frame on the daily here, you know, obviously a lot more buying than selling. But, so a lot of volume came in on the buying side. Some was selling, I'm sure. And then here we got a bunch of selling, wiped out the majority of the price action, and very, very little volume coming in here. So let's see what happens at least, you know, the next couple of days of this week. But anything making the lowest low it's ever made, got to be real, real careful. And again, I set a bad example when it comes to pot stocks, but, you know, those are like actual businesses, some of them profitable with like actual potential for like fundamental and technicals as well. But enough of that. boring ass technical analysis. I can't remember. Did we even look at this stuff? No, we didn't. All right, so we're going to look through here at the magma stocks. We're going to look at the lava and see what's about to flow this week during earnings. So obviously, Tesla already did its earnings. Not terrible. Surprise on 489 to the upside, 4.89% surprise to the upside. And revenue-wise, down by 2.4% below estimates. So overall, still a beat. At the lows, which is also the 236. And I do expect it to continue to the downside. Do we get a little burst in the meantime? It looks like it's setting up for a move to the upside. Just working on some bullish divergence here. Hard buy signal coming out of the bearish control zone. Seems like it wants to get a pop to the upside here. Now we'll see what happens. Obviously, they've already reported. So, all right. So now looking at the magma stocks. Microsoft on the daily. Microsoft is reporting on the 25th. So what is that? Tuesday? What day is today? Yeah, Tuesday. So that's a big one, obviously. Big player. Big player. The old magma stocks. Again, bullish divergence. About to report earnings. Let's look at the last couple earnings. Well, that was a miss. Still went up after that. That was a beat. Went down. That was a beat. Went down. Doesn't tell us much. Does not tell us much. So yeah, I mean, I don't have an edge. What's going to happen right here? We're at resistance. Bullish divergence. A bull move would give us a pop to like 270. A bear move, we sweep the lows at 220. So we're basically like in the middle of the range, coin toss. No edge going into earnings, in my opinion. I don't have an edge personally. You may. Apple on the daily. So we bounced the 236. We bounced the pre-Rona highs right here. We're trying to move up here aggressively to the upside. I did take some profits right here. I'm not going to give all of this back, but it does seem likely that we get a 200 exponential and simple retest. So we know Apple has some serious currency headwinds. They report on the 27th. I mean, I don't know if they're going to miss or beat, but I mean, rationally, reasonably, you would say, okay, well, if they have a lot of currency headwinds and obviously, you know, recession on the horizon, whatever, I would assume that it's not going to be like particularly amazing. We are below the 200 exponential and simple, clearly in a bear market. Apple has been holding up better than most, though. So we got the 25th, the 27th, and then we've got Google. And you see why this is important on the 25th as well. So Tuesday, at the lows, at the 382. Last two have been misses. I mean, let's be real right now. Where's Google get most of its money from? Ad revenue. Well, who's spending a bunch of money on ads right now? Fucking no one. So likely Google not going to do particularly well, in my opinion. So how's that going to reflect on the stock? Well, bear market below the 200s at, you know, support at the lowest low. I think Google is getting ready for a trip down to 86, sub 100. So could be wrong. Again, I don't have a massive edge, but who's advertising right now? Exactly. Nobody. Meta on the daily at the lows, the lowest low it's ever low, gap down. Earnings on Meta is the 26th, so Wednesday. So you see why this is so important. A cluster of very, very important stocks all reporting like a couple days apart. Last was a miss. One before that was a beat. One before that was a miss and a capitulation. One before that was a beat. So I don't really have an edge right here. At support, I mean, this thing's on a race to zero. So if it literally just doesn't have horrible, horrible numbers, which it probably will, it's going to burst to the upside. If it doesn't. But again, it probably will. Now, I know I said this was my target, and I was looking for it to get down here, and there was potential for a 46% upside move. And there is. There is. There's bullish divergence. There's the fact that it's just melted down a lot. I mean, it is technically a favorable trade setup. I mean, we basically say, hey, if we violate the 382, you know, get out. 46 upside, 8% downside. It's like 5.6 to 1 risk reward ratio. You guys know I don't like Meta, but damn if that ain't a trade setup. Amazon is next on the daily. And again, Amazon reporting on the 27th. So we basically have Tuesday, Wednesday, and Thursday is a shit show of big influential names, especially, you know, if you're into the tech world. How's Amazon been doing? Are they crushing sales? People buying tons and tons of stuff and getting it delivered to their houses? I don't know. I would say probably not. Miss again? I don't know. Like they're 3 for 4 on misses. Okay, so I would say 75% chance they miss since we literally went into a bear market. So what's the chance? Maybe this is going to be the 25% beat. I don't know. We'll see. It doesn't look particularly great. Next push up would be 123. After that, somewhere in like the 136 range. Push down would be retest the lows at 102. So about $20 to the downside, about $14 to the upside. Bullish divergence on short-term time frames. Clearly in a bear market. So yeah, it's going to be a big week, okay? Because whatever happens with these big names is going to, I think, honestly, I mean, there's a lot to watch right now, but a couple things are going to tell us all the answers we need. I mean, the DXY has to get its dick kicked in if we're going to see a real rally. I mean, a real fucking rally. And I'm talking about a bear market rally. Not, hey, we're in a bull market now. DXY has to get its dick kicked. It's the only way. TNX, I mean, it could stay like okay, but we don't want to see it like continuing to make cycle highs if we're going to see a sustained rally. You know, we know what to look for in the major indices. We know what to look for with earning and the big tech stocks. We know what to watch for with gold. If gold keeps acting like a little bitch and getting its dick kicked in, I mean, I don't believe that the dollar's going to weaken. Because I honestly think gold is like the little fucking canary in the coal mine, kind of sniffing out the poison in the air for the dollar. So if we see a move in the dollar, if we don't see a counter move in gold, I don't trust it. And so far, that's been right the whole way. So we got to see strength in gold, weakness in the dollar, and at least just sideways on treasuries. And we could get a real rally for, you know, a couple months even potentially into the holidays. Now, if those things don't happen, throw anything bullish I said at all out the window. Yeah, and I think that pretty much sums it up. So we'll see what happens. The catalyst for the massive major potential market rally is the DXY. It's the DXY. The problem is, and we need that for the world's sake. We need the DXY to sell off and weaken. But the problem is, I think it's going to be the same thing again, where we weaken and people don't take that opportunity to deleverage. They may even lever up even more, you know, trying to bet on a macro top on the dollar. And I just think that's going to be the next fuel for the next leg up. So we'll see. But yeah, that's it. We're going to go ahead and wrap it up there. Appreciate everybody tuning in. Let me jump in the comments here real quick, and then we're out of here. Ralph Smith, what's up, brother? Good to see you. First sell rate target is close to $4.20. Oh my God, that's funny. Elon must be manipulating it. What's up, Calma Betty? He said, what's up? How are you? I'm good, man. I hope you are doing well as well. Also, and then, do you think the DXY will go to new highs until the Fed pivot? Do I think the DXY will go to new cycle highs? Yes. New macro highs? I don't know. We'll have to see. It depends. I mean, because it's relative, it's not just like because the Fed pivots. Because here's like the possible ways it could play out that would be unexpected, but have like a weird result. If the DXY was strong like it is now, and let's just say like the European Central Bank pivots and the Bank of England pivots, and, you know, like Japanese bank, you know, they all pivot. And then the Fed pivots. Well, it doesn't mean that the DXY has to actually weaken. So even if the Fed pivots, it doesn't necessarily mean the DXY weakens in relation to the other banks if they too have also pivoted. So now the case that I would expect if you were going to see the DXY just start melting down would be if the Fed pivoted and these other central banks did not. If the other central banks continued tightening and the Fed pivoted, then I think we would see the DXY start melting down, and then you would see, you know, the big rally in, you know, assets, etc. But I mean, there's always like the weird situations that are like, don't make sense. And then when you talk about it, you're like, oh, actually, that does make sense. So it's all relative. So don't just look at what the Fed does. Look at what the Fed does in comparison to what the other central banks do. And if you want to see times when we're likely to see some weakness in like the DXY, well, just look at, you know, when the other central banks that are in the DXY or country-wise or in the DXY, you know, are hiking their rates. Because if we're like, basically, if there's a gap of, say, 3% between US rates and, you know, Canada or whatever, or England, whatever it is, and then suddenly, you know, Canada or England, whoever we're talking about, hikes rates by another percent, and then the gap goes from 3% difference to 2% difference, you know, closes the gap, you would expect the DXY to weaken relative to those other currencies because the gap is less. And then when the Fed hikes rates again, then we look where the gap's at again, and it's like, oh, it's right back to where it was. DXY likely would strengthen back to where it was. And as long as the trend is to the upside, the moves to the upside are always going to be bigger. So we'll continue to just put in new highs as we continue to just keep the gap the same, in my opinion. All right, and then we got Ralph Smith says, haha, you sound like you don't like the look of QNGY. I mean, it's not that I don't like it. The chart looks like shit. I'm just telling how it is. I'm like, look, you know, if you got an ugly girlfriend, don't bring her around me, man. I'm going to tell you how it is. All right? And you're like, oh, but she's got a good personality. I'm like, oh, I mean, I like not having lights on in my house. I'm like, she's not that ugly. Don't exaggerate. Same with your kids, too. You showed me that baby picture, and that thing looks like it just got thrown in a sack and kicked. I'm going to tell you, like, that thing's fucked up. But it does look like you, which is not a compliment. Looks like LUNC. Yeah, I know, right? It's like on the way to zero stocks. Jay Hoff. Yeah, exactly. All right, guys. Well, appreciate everybody tuning in today. Hope you all enjoyed this stream. Try to keep it a little bit on the lighter side. Always try to have some fun with it. I know it sucks, you know, people's long-term portfolios and everything, but, you know, you guys are in here putting in the work, putting in the time, and that's the people that are going to really reap the rewards when the bear market does end, if and when the bear market ends. Could just go on forever and everything goes to zero, but I'm betting against that, you know. All right, so everybody have a great night. We'll see you guys on Wednesday for our midweek market update. Every Sunday and Wednesday, tune in from 8 p.m. till roughly like 9 or 10 Eastern Standard Time. And then, of course, Friday, members-only live streams, but anybody can come. So you're like, that's not members only then. Well, the members made it happen, so it's for them, but, you know, you can bring a guest or just come alone. So that is 11 a.m. Eastern Standard Time till usually about 1. But that's it. Everybody have a great night, great week, and we'll be watching these charts like a hawk. Obviously, you see all the group members in there. Appreciate each and every one of you for tuning in. And remember, of course, as always, if you listen to anything I'm saying for any purposes other than entertainment, you will be living in a van down by the river. And not a good van. I'm talking about one of the old broken down ones from like the 80s. So not the ideal scenario for most people. But you might be like, that doesn't sound so bad. In which case, there's something wrong with you. But that being said, everybody have a great night. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Appreciate each and every one of you. Got the best community in crypto right here, obviously. Have a great night, guys, and I will catch you on the next one. But that is it for me. Crypto Trend Trader with our Sunday evening market look ahead. It is 10 p.m. Eastern Standard Time on 10/23/2022, and I'm out of here. Peace.